Hello, everyone. Welcome to Chartwise Women with Erin Swenlin and Mary Ellen McGonagle. Welcome to our Thursday show, October 15th, 2020. We are recording this before the market has closed, just so everybody is aware. Welcome, Mary Ellen. Today we're going to be talking about fear factor.
Ooh, I'm reminded of that TV show years ago where people would had to eat bugs and do
Right. I always determined that I could never, ever go on that show. I have too many fears. There's just about too many things. I would be out almost immediately.
I'm sure you're not alone, hence the popularity of that show in its day.
Absolutely. But the interesting thing is when we start to apply it to the market, the fear factor, we actually do measure that. And many people are probably familiar with sentiment measures. And sentiment is, how do you feel about that?
Mm-hmm.
So
and
really
interesting.
we want to take the temperature of the market.
And I was going to mention a sidebar item when you talk about fear factor. It's not, it certainly is within the markets, but I did see a headline yesterday that people are apparently, consumers are back to hoarding goods. Bare shelves are apparently beginning to emerge among supermarkets and different stores. So that's a different kind of fear. But it's seemingly coming back. Just thought I'd shout that out there.
Certainly. Well, and part of sentiment is certainly what's going on around, in the news. So I know you had a really good chart that kind of talks about that, but, sentiment is just a measure of how comfortable, and one of the ways we do measure it is through volatility. I know that, but you're going to get into some of that. So I'm going to let you take over. Oh, we have wisdom of the week. Wait a minute.
Yes, we can't miss that. Of course.
Absolutely not. You go ahead and go first.
Sure. So mine is the first bulletin, and it says that uncertainty will provoke investors' fears. This is a very, very common occurrence throughout my many years working with the markets and really experiencing different market cycles. At the end of the day, investors, both institutional and really all the way down the line, anytime that we are entering into or are in a period where there are major market impactful decisions that are just kind of left hanging out there, stimulus bill, certainly the election looms large. And with that uncertainty, very naturally, people's investors' fears come into play. So I think we're kind of in a prime period right now with a lot that's uncertain, earnings season coming into play. So lots of uncertainty out there lingering.
Certainly. And one of the things that people may not be aware of is that we actually have quite a few measures of sentiment. And the reason I use them is that second bullet. Sentiment is contrarian, meaning if everybody is bearish, you see it on the news, you see it as a headline, you see when everybody gets extraordinarily bearish, that is actually bullish for the market. That's usually when you start to see those reversals. Once everybody is they've had it, they're at capitulation, that's really that time to start looking for those reversals. And so measuring sentiment can be very important. And of course, the reverse is true. If everybody is super bullish and things look really great, we had that going into the beginning of September, that for, the last top we had, everybody was just really bullish. Buying was going on everywhere, new highs, but it was too much bullishness. And what did that get us? We ended up with quite a pullback through the rest of September.
Yeah, so we can see really how critical investor sentiment is to market direction. I know I address it a lot with my MEM Edge report because oftentimes, regardless of the economic backdrop and growth prospects for a company, that market sentiment is ultimately going to override. It's really going to be the driver of the markets overall.
All right. Now you can share that chart we were talking about.
Yes.
So what is sentiment?
Exactly. So there are several ways, of course, Erin, you're going to get into some that are more perhaps graphical, but from my work, I view market sentiment as investors' response. So up here, I'm saying that are the markets able to shrug off potentially damaging news? And this would actually be very applicable coming out of that bear market. We were really still experiencing very negative news. Cases of COVID were increasing, deaths were increasing as well, stores locked down and so forth, but the broader markets were able to shrug that off. There was an eye toward down the road and a potential recovery. So a lot of you, I'm sure, are familiar with that extensive rally out of that bear market. So that was bullish. The markets were able to shrug off. Now, on the other hand, when we're in a period where positive news is being rewarded, and that I could argue would be during earnings season. You're going to want to really pay close attention. We're in the beginning throes of earnings season, and they're rather mixed so far, but you're going to want to watch not only investors' response, particularly when the news is positive. Are those stocks being rewarded? Are they being bid up? Or are investors looking the other way? If they are looking the other way, that's telling you that investor sentiment is still not constructive. And we are certainly, as mentioned, in that period of uncertainty, and the markets just do not like uncertainty. As we move on, I'm going to take us back. I have charts taking us back pre and post 2016 election, and also I'm going to walk you through the action among various sectors leading into that 2016 election. And as many of you may recall, it was a bit contentious going into it, so we'll see how the markets behaved, and I think you'll be surprised. Yes. So,
all right. Go ahead. Are you going to show them now? You've teased us.
Oh, absolutely. Let me go ahead. How dare I? Yes. So let's take a look here. This is the S&P 500, and I am taking us back to this period 2016 going into that November election. Certainly not intending to alarm anyone, but just giving you a sense of what may occur. Now, back here, this was that Brexit vote where the UK voted to depart from the European Union. And but as we move forward, there was some positiveness going into the elections, but in the beginning of September, things did start to waver because it was rather close. It was Hillary Clinton versus Trump. And take a look into the days leading up to that election. We can see that the markets did, in fact, deteriorate quite a bit. They found support here, and of course, the rest is history as far as coming out of that election. But just a little bit of a heads up, a warning, if you will. Here's a look at volatility going into that 2016. Now, the volatility actually was quite volatile going into the elections, but when we see these moves and volatility appear, anything above that 16, 18 level is really indicating to you that volatility is spiking. So this is leading us right into that election day. And take a look, we certainly did get a spike going into the election. Once that fear, that uncertainty was behind us, we saw a very significant drop in volatility, and it did continue to decline. Now, I don't know if I have time now to share with you the different sectors.
Go ahead.
Sure. Okay.
And we can go into break.
Super. So what I'm sharing with you now is a view going into, again, the 2016 elections. I do recall this very well, and I've done a lot of work with this presentations this year as far as what to anticipate going into the elections using historical precedent. And I will tell you, technology, although this is a very tenuous decline, it did hold up the best as far as these sectors. There was software, a lot of innovation going into this period, so it did hold in quite well. So I did want to share with you some of the other areas that normally would be viewed as defensive, and this is going into that 2016 election. Again, no intent here to alarm anyone. I did do, I offer courses on this as far as whether to tell if it is a pullback or is it more. For me, it's that 50-day simple moving average. A break below that is going to be rather ominous. We can take a quick look here at consumer staples, a normally very staid area, and it did get a bit dicey. not anticipating that, of course, going into this period. More importantly, this is simply sharing with you what to be on the lookout for, because we can also see, in addition to technology, consumer staples held in, and I'm talking about relatively well. So there were pockets of strength, there always will be, but each period, of course, will bring its own demons, but this is more of a display to let you know what occurred at the most recent election. I'm getting a sense going into this election, it's not as contentious, and it feels a bit more less uncertain than 2016. So I certainly wanted to share that as well. Yeah.
Very good. So we're going to take a break, and when we come back, I'm going to sort of take over the math girl here, and I'm going to show you some charts on how I measure sentiment on a chart, technically. So I thought that was excellent, though, talking about what's typically going to happen sentiment-wise going into an election. I thought that was great. We'll be right back after this. And we are back with Chartwise women, Erin Swenlin and Mary Ellen McGonagle here. We've been talking about sentiment, or the fear factor. And Mary Ellen has had a great chart she was showing us about the presidential election.
And we can share your screen, perhaps.
Go through. Let's go ahead and get to our slides, and then I will talk to you a little bit about some of these measures that I use. One of them, of course, is the VIX.
You'll want to share your screen. There you go.
Yes. One of the common measures is the volatility index. You showed that a little bit. I'm going to show how I use it. And then there are also quite a few other measures, and one of them is using polling data. So I'm going to talk about those two, and then we will look at cash flow, because that's also a great way to do it. So I'm going to share my screen here. All righty, here we go. So this is my short-term climactic indicators chart, and I use this and look at it every day in the Decision Point Alert. You can find out more about that, of course, at decisionpoint.com. But one of the things that I look at is not only what's going on with volatility, which of course is that measurement of the fear factor, but I also look at total volume. I also look at the net advances and declines. And then I also follow those new highs. Of course, I have my price momentum oscillator here. You got to always have that. So what you can see is that usually, and I mark these with red arrows, I invert my VIX, okay? So that the lower readings are on top. And the reason I do that is when sentiment is, you have those low readings, that means there's comfort, people are feeling bullish. And so that's an overbought reading in my book. So I flip it around. And so when people get extraordinarily confident or complacent, as we like to say, that usually is going to be your indication that in the next day or two, you're going to see a decline. That's just typical from what I've found with my research. But you can see at this last top, we had that spike in positive readings, positive new highs. And we also saw that VIX, you notice, get very, very low on its readings, and it punctured this Bollinger Band up here. And so that was my clue that, everybody is extraordinarily bullish and comfortable. And we've got the squeeze going here. It's not doing a whole lot. Well, what happens? How do you relieve a squeeze? Well, extra volatility. And that means, the VIX is going to start traveling higher. And of course, that's not good for the market. So that's how I use the VIX. I invert it and look at low readings as overbought and higher readings as oversold, because sentiment is contrarian. So, looking at what's going on now, we're now getting some high readings on the VIX. And usually you get that penetration of that lower band on my inverted scale, and that usually leads to higher prices. So it'll be interesting to see how this is followed up. The other sentiment measures that I have, and one of them is polling data. And I follow quite a few different polls and a couple of other technical indicators. So I want to look at some of these polls. So this is the American Association of Individual Investors, and you can get this data on StockCharts.com if it's something you want to look at. And what it tells us is it's strictly a poll. Mark the box. Are you bullish or are you bearish? And it's over cats and dogs. I mean, every investor, from the big guys to the little guys, take this poll. And so what we want to watch for are these big spikes or these really low readings, because those will tell us how, bullish or bearish. And again, the more bearish people are, that's when you start looking for those reversals. And right now you can see, just looking in this thumbnail, people aren't as bearish as maybe you might think.
Now is this, this is a weekly chart. Okay. I wonder, yes. Can it do daily or would it not be as effective? I was wondering.
It's not quite as effective.
Okay, no worries.
I've found, but because I like to see it over a larger period of time, because you can really see those spikes in the ratio there. So this one is the National Association of Active Investment Managers. These are technical analysts who actually, are big time money. They handle a lot of money. And what this particular survey does, it asks all of them, how exposed are you to the market? How much money you got out there? Or how little? Are you not very exposed? And at this point, you can see that we are still showing some high exposure by those big money managers. So they're out there, and they were out there right before the last decline too. Notice that right here. So this is a signal based on what the money managers are doing that we might want to pay attention to. They're usually right for a little while, but then they're wrong.
And that is interesting to me that in September, when we had that peak in the broader markets and that sell-off, how quickly they were able to go from being highly invested to not. In my experience, that these institutions are mandated to remain mostly fully invested. So that's
right. And so, these are they're technical analysts. These are the guys who follow technicals. So you'll see a lot of differences maybe in how they handle their exposures, but it also counts, short positions or maybe bear funds or hedges. So, the other poll is the Wall Street Sentiment Survey. And this, I actually am part of this particular poll. They send out an email once a week and ask me how I think the market will end the next week. And so we take that polling data and look at what the other technical analysts are showing, the writers, the bloggers like myself. And you can see that we came into this week very bullish. And, so far, obviously, it's been an okay week. This is a weekly chart. We're about even for the week. But a lot of times you'll notice with these guys, myself included, is they tend to be right a lot of the time. So rather than a very contrarian measurement, it's not quite as contrarian, but you can still see when everybody was very bullish, it was right, people were right, but then that's when you started to see the drop. Over here, we were getting bullish at that bear market bottom. So these are other measures that you can take of what's going on. But the next thing I'm going to cover is the other measure that I use. And this is something that I learned from my father at Decision Point. He came up with a great measure, and that is by looking at cash flow and volume. So you can use cash flow and volume. I like this far better than those polls, because let's face it, if it's a poll, you just have to check a box. We're not talking about real money here. We're just talking about, hey, how do you feel right now? With cash flow and volume, you can actually see it on the chart. And so I'm going to show you one of my charts that I like to use. And it's RIDEX Fund Asset Analysis. I know it sounds very complicated. It's actually not very. So there's it's not run by RIDEX, but there is a group of funds. Gosh, I'm losing my mind. I can't remember who does them now, but they're the RY mutual funds you might see out there. And so what we did is they have a group, and it's a static group. They look at the bear funds and how much money and assets are in those. And they look at the money market and bull and sector funds and how much money is in that. So money wise, this is your bearish right here, right? Money market are neutral people. They're not in the market. And this is people who are basically shorting. And then you have those sector funds. So what's going on right now with this cash flow? Well, currently you can see that bear funds, we're actually seeing less cash flow in those, at least over this past month. And we're seeing an increase in the bull and sector funds. So that tells me really that the people aren't as bearish as maybe you might think they are right now. Because when you look at where they're putting their money in equities and those bull and sector funds. So what we do at Decision Point is we take this information and we turn it into a ratio. And it is inverted for the same reason I did before. You want overbought at the top and oversold on the bottom. I have marked cardinal tops. And lo and behold, as you can see, when that ratio is very low, meaning, of course, you can see the bottom, the denominator here is bull assets. The larger and larger that gets, the smaller and smaller the number gets, that ratio. And you can see when everybody's very high into those equities, that's when you need to start thinking about a possible drop coming. And you can see it really matches up quite nicely. And where are we right now, Mary Ellen?
Yeah, I don't know. It's
not really where we want to be as far as the cash flow. And I would just say that I kind of covered volume, but that really is covered. Like I said, I have this on most of my charts, the total volume. This is a great one to see. This is the SPY, so I don't necessarily pay attention to the SPY volume. I'm looking at the total volume for the day. I don't even care if it was positive or negative. I just want to know how many people were involved. What was the participation? And you can see over, as far as the yearly annual average, the total volume has still been fairly low. But we look for, of course, are these spikes. Of course, tomorrow's options expiration day, so we're going to see a likely spike in total volume. But, that tells you the participation in that move. If we get some really high volume numbers today on this drop, that would tell me there's some conviction.
I agree. Volume as an indicator. I couldn't agree more. It shows conviction. Absolutely. So I think we need to move on to the gold. Let's take a quick look at that before we...
Yes. So one of the things that we do at Decision Point as well, and I didn't want to make this a big commercial for us, but one of the things we study, and honestly we study it every day, is gold sentiment. And so you may ask, well, how do you measure gold sentiment? Well, I think there are a couple of other ways besides what I'm doing. But one of the ways we do it, and I'm going to pull up my GLD chart just so you can see what's going on in the gold market right now. But one of the things that we look at, this is the contract. So this is where it was. It was up as of yesterday. We don't have the numbers yet because the market hasn't closed. But so one of the ways I look at sentiment as far as gold is I look at the Sprott Physical Gold Trust. And when people buy PHYS, PHYS, because they hold the actual metals, they hold it, you're either buying PHYS at a discount or a premium based on the current price of what they have.
Okay, very good.
So what I like to do is follow the discounts and the premiums. And one of the things you will often notice with sentiment for gold is that when you get these discounts that are very high, that tells you there's not enough interest. We've got discounts. That means that people are not very bullish on gold. And that's a good thing, right? Sentiment is contrarian. If everybody's,
all right,
bearish, then bullish, yes, goes back and forth. So,
very good.
So just to look at that gives you that idea of the sentiment. Typically when it spikes and gets very negative, right? Everybody's very bearish. That's when you start looking for those rises.
Okay.
And reversely,
like it.
If you get premiums.
I've been reading that cryptocurrency is being used as a hedge too, against fear. Let's go ahead to our last segment that we always enjoy doing. It's called that happened. We scoured the globe for interesting occurrences over the last week. And last week there was news, a farm in Dutch country is offering cow cuddling. So for those that are feeling stressed, they're saying, why not hug a cow?
Well, so we're talking fear factor, right?
Exactly. So actually what they did find is that warmer body temperatures from the cows, their slower heartbeats, all have acted as a way to help people relax. So you go to this farm, you have a nice tour, and then for up to 3 hours, you can cow cuddle. So I certainly did want to share with you from there some stocks that might be relevant at this time if you were to go to this farm for cow cuddling. And we're taking a look here at GoPro, GPRO. This is a daily chart. Take a look at this nice base breakout on huge volume. For those of you not familiar, they do offer the ability for individuals to either put cameras strapped them to their head, handheld, very high quality. A lot of people are out and about and they want to really show people what they're doing while outdoors. So they had a big spike here in subscribership. And we can see that the stock advanced quite a bit higher beyond that. This is a nice bullish outside day, and the stock has a positive RSI and MACD. We can also take a look at Pinterest because, of course, after you post, whether it is a video or you can, of course, cull a stationary photo from that, you may want to post it on Pinterest. And we can see the stock gapped up here on huge volume and more recently has broken out of this nice 2-month base on big volume. So it is in a nice confirmed uptrend. Erin, I don't know if you want to share, Google purchased Fitbit, and that company is famous for being able to...
Oh, go ahead. You've got the screen. Why don't I
Sure.
let you do that?
Take a look at Google. It had been a lagger. It looks like it's picking up here. Google purchased Fitbit, and the company is Fitbit in particular, and there certainly are other products, Apple's iWatch and so forth, that will help you monitor your heartbeat and help you know when it's time to go cuddle that cow so you can reduce your anxiety. So let's take a look here at Google. It had that peak in price here, similar to a lot of these big FANG stocks, pulled back nicely, really got pulled back quite a bit, however, to this 200-day. And then we can see this week, and Monday was a nice day for the broader markets and these bigger growth names, broke back above this 50-day simple moving average. So quite bullish there. And we can see that the stock is now potentially poised. Erin, we talked about that volume. So what I like here is the fact that this volume did, in fact, occurred during this downtrend reversal. And one last stock that we can look at, because of course you'll want to post your photo on Facebook. This was another FANG stock, peaked here in the beginning of September. It too did have this break back above this 50-day on big volume, but it does appear to be giving that back. So not quite as constructive looking, but
oh my goodness, it's already time to wrap it up though.
Okay.
Yeah, we had some great discussion about sentiment. I hope everybody has a great weekend, and we wish you well and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.